Morning, everyone. Welcome to MPC Markets Morning Call for the 9th of July, 2025. As we can see there on screen, a big copper bull as President Trump overnight announced a significantly higher tariff on copper at 50%. Copper was hovering just below record highs at sort of around about $5.20. And obviously spiked about 10% overnight to fresh record highs. So now you've just got to be very careful with this, obviously, because there is copper on COMEX, which is priced in US dollars, which is in around about $5.40 a pound, etc. Whereas there's also a London Metal Exchange contract as well, which would not have rallied as much. Because obviously it would almost have gone the other way due to the fact that there now may be oversupply globally, because the US is obviously going to buy from as many domestic sources as humanly possible. Overall, it was a really busy night for Trump. He's extended the tariff deadline, obviously, to August the 1st. He said that's a hard deadline, but he's also said that before. But he clarified that the decision means that countries that are unable to reach a new trade agreement will face the sharply increased tariffs. There's some significant levies on major Asian and African economies, South Africa, South Korea, Japan, Malaysia. And there's some additional duties on semiconductors, pharmaceuticals expected soon. I did see a brief announcement on the pharmaceuticals is sort of he's kicked the can down the road to 18 months to 2 years away, but he said they're going to be 200%. So one thing that was very interesting was that the EU and India were excluded from the last round of tariff threats. So clearly they are actually close to agreements with the US. So, I mean, it's very hard to keep track. Obviously, we had Trump say that letters are going out, and letters mean that that trade deals are done. But he also said he sent a letter to Japan earlier in the week, and obviously then he threatened them. So, it's very confusing, which is why the equity market has drifted back off. Dow was down about 0.4, S&P largely unchanged, as was the Nasdaq. The Russell was up a little bit. The Aussie market and the SPY overnight was down probably 0.1%. Be an interesting old day on the ASX today after the RBA yesterday, and we'll obviously go and we'll cover that a little bit later in the podcast. Shifting over to the heat map of the US markets overnight, Nvidia was up slightly, Mag 7 broadly unchanged. Tesla had a little bit of a bounce. Oil prices, obviously buoying the energy sector there. Exxon and Chevron, or both up around about 3%. JP Morgan, Bank of America, actually down about 3% overnight, which will be interesting leading into next week's, into next week's earnings. So I've got an updated calendar there towards the end of the pod, and we'll run through those in a little bit. But Walmart, Costco as well, drifting off as have the consumer stocks, obviously, because at the end of the day, tariffs are inflationary. No matter what he's trying to do for the country, whether you agree with him or not, if the price of, we use copper for a lot of things. We use semiconductors at a base level because that cost will be passed on to the consumer for AI on a lot of things. Pharmaceuticals, everyone needs medicine. So no matter how you want to dice this up, this is, it's going to be inflationary, and it's going to compress margins for a lot of those consumer-based companies. So, and particularly obviously with oil prices heading back up as well. A lot of uncertainty, never good for markets. Look, if you want to see the forest for the trees, we are still very much towards record highs. I don't think, given the amount of uncertainty, the amount of haphazard announcements, geopolitical issues, etc., this is the best stock market performance in history to be anywhere near record highs. To give you some context, of my 30 years of being in this industry, there is no way we would be anywhere near here in any market pre pre-2020 essentially. So, it could turn out to be overpriced, or it could turn out to be resilient and stay up here. At this point in time, I think the market is pretty overpriced, and there's a lot of things going to come home to roost over the coming 6 months. And Trump's obviously the benefit of his white noise is really letting the investors look through the broader picture and of the macro and focus on company specific, which is probably very much helping the stock market, particularly in the US. Now, we've got obviously the commodities overnight. Gold was off a little bit. Silver was basically flat. Copper, the big one, massive move, up 10%, up 9% for the week. There was a very big spike high in that. It's around about $5.50 at the moment. And realistically, I would not expect that momentum to dissipate anytime soon. It got up to $5.90 when on that stop run. Huge volumes, but technically now it has busted up, and we would expect that to keep going. We are looking at a couple of picks in the copper sector, which are very much US based. We've got a global pick, and obviously between BHP and Rio, which one has the most US copper exposure. But obviously that's that'll be out there for members this morning for you to be able to take advantage of. So I've got the global calendar for next week. Given that this week is so quiet, we've got FOMC minutes tonight, and there'll be a focus on central bank. Commentary, particularly after Michelle Bullock yesterday was largely almost had rotten fruit thrown at her at a press conference. We had 32 or 36 economists or pundits or market, commentators saying that they were going to go 25. Some were calling for 50, but the people calling for 50 are just rank self-interest, commentators. But who were literally trying to sell subscriptions by, publishing the popular opinion continuously. I've always been a bit of an outlier. I don't believe that we should be cutting rates. As someone who went through the GFC, we went to emergency rates back in 2007, 2008, and we really haven't come out of it. We were almost there in COVID. And then COVID hit. And then, we've just binged on cheap credit for a long period of time. And eventually that leads to asset bubbles. It's an inevitable fact. It's happened for 100 years on repeat every 10 years. So realistically, I think Michelle Bullock's move yesterday was very prudent. She didn't say they're not going to cut rates. She said it was about the timing. There was some questions yesterday from the press that were just petulant, to be brutally honest. Having a scan of the press this morning, again, very petulant. They got it wrong, essentially, and now they're having a crack at her for doing a job, basically. So the big thing with this is, and I've said this all for 18 months, listen to what the central banks are saying, and they're saying higher for longer. Powell has said it 100,000 times, and the market just hears. They ignore the higher for longer and just go, oh, rate cuts are coming. The market's obviously got skin in the game. Lower rates means, better stock markets, higher asset prices. Of course, people who work at investment banks and for stock market firms and sell mortgages are going to want interest rates down. So, but what you want and what the economy needs are two different things. And that's why the Reserve Bank is independent, because we can't be trusted to make rational and, unemotional decisions about rates. These cuts will come, and Powell said the same thing. He would have cut in July. However, the tariff uncertainty means that they're better off waiting. So, and essentially that is the very clear message that the press seems to skip over and then blow up about after the fact. I mean, realistically, just go back and read the statements properly instead of trying to pre-writing your article and then shoving, trying to shove the situation that is presented by the RBA or the central banks into the article you've already written. Realistically, we'll probably get 2 to 3 more cuts. That's usually what is in the cycle. It takes longer than expected. The one in May or April, May was due to the election. They didn't want to influence the election. And essentially, it is a wait-and-see attitude. The trim mean's still at 2.9, but again, very, cherry-picking. They're looking at the core inflation rate, the monthly figures, which happens to be the lowest number. But if you look at the trim mean, it's still around 2.9. Unemployment's still at 4.1%. And the government keeps hiring people, which fiscally is in direct contrast to what the RBA is trying to do. So, and I mean, essentially as well, the migration policy just keeps importing millionaires who have to buy houses. And I mean, there's a whole structural, change that needs to be made here. It's not just a blunt instrument of moving interest rates. So, however, make sure you look at those articles today in context if you're reading through the financial papers. Next week in earnings, we've got JP Morgan, Citigroup, and the world's largest fund manager, BlackRock. Then we've got on the second day, Johnson & Johnson, Bank of America, Wells Fargo, Goldman Sachs, Morgan Stanley. So one of the Mag 7 is on Thursday in Netflix. And there are some key inflation numbers for the States Wednesday, around Tuesday, Wednesday. Some key economic activity numbers for China early in the week, and the Aussie employment numbers on Thursday. So, yeah, it should be a pretty mixed day. I think the market needs to digest and see, obviously they're going to have to reset their rate expectations. They're going to have to reset these tariff expectations because there was a few surprises there. I would expect it to be fairly volatile within a tight range, if that makes any sense. I think there'll be a lot of resetting of models or opinions on markets generally, and overall, which will probably net out to be slightly down. I would say that the banks probably keep their net interest margin higher, which could be beneficial to them. So that could buoy the Aussie market. Copper could buoy the Aussie market as well. Obviously, BHP and Rio, massive copper producers, Sandfire, etc. Capstone Copper is another one, CSC, which does have a small operation in the US. So, I would expect that there to be, the heat map to be very patchy today. But yeah, it is certainly one of those days where I think Trump will have further announcements tomorrow. He's going to have to announce a win at some stage. So we do have a form of economic number with Amazon's longest ever Prime Day event, which is their annual sale, which they're now doing twice a year. But the sales period's 4 days, but the sales numbers from Amazon come out pretty quickly, and their expectations are for record digital sales. So some people will see that as a litmus test for the consumer. So if they are weak numbers, we would expect potentially some more weakness in that consumer sector. But yeah, that wraps it up for today. Hope everyone has a good day, and we will speak tomorrow.